I often say that owning gold, you are betting against, or as we say in financial markets, you're short your own politicians. And that's what you're doing. You're saying, I don't like them, don't trust them, I want to be short them. Do you think that the pound in your pocket will buy the same amount of goods and services in a year, more goods and services in a year, or less goods and services in a year?
Yes.
Now, this is what gold is measuring. Unless you think that governments are going to turn disciplined and structurally raise interest rates and not spend more than they bring in taxes, I wouldn't be overly worried about the direction.
Hello and welcome to the MoneyMagpie Invest podcast. I'm Jasmine Birtles, founder of MoneyMagpie.com, and remember to subscribe, like, comment. We always read your comments and we do reply, and tell all your friends how fabulous it is, because you know you want to. Now today I am speaking to Ned Naylor-Leyland, who is head of gold and silver at Jupiter, because, well, gold and silver. Hello Ned.
Hi there, nice to be here.
So Ned, let's start with gold, because both gold and silver are in the doldrums at the moment, and I'm wondering why. Frankly, it doesn't make sense to me. What's your view of gold right now, and is it a good time to buy because it's so cheap?
Well, look, I think there are various clarifications that are probably worth making when you ask that question. The first is that there's no gold price, as it were. You know, what you I think were asking me is what's happening to the price of gold in dollars. I mean, we're both Brits, so really we should be interested in it in sterling, rather than in dollars. But people obsess over the US dollar gold price. And I'm emphasizing this point because gold and silver are both foreign exchange instruments. So you should really think about them exactly the same way you think about euros or sterling or dollars. And so when coming to the answer, you know, what's been going on with the US dollar gold price, really this question is always about, if I was wanting to own dollars rather than thinking about gold, how has that changed in the last 6 months? And the answer is really simple, which is the back end of January, the new Federal Reserve chairman was announced, and the market took that as being hawkish. So the market felt that this meant that there would be less rate cuts, potentially rate hikes. In other words, that's actually positive on a forward basis for US dollars, on a relative basis. Because in fact, gold's not the thing that's moving. It's the dollar and euros and sterling that move. Gold doesn't move. Gold is the thing that measures. Gold's the thing that's a zero, and it's measuring the behavior of dollars, sterling, euros, yen, Swiss francs. So basically, the dollar had a bounce against gold, which is the principal risk-free form of money. And it did that because the market got a bit more positive about dollars short term. I don't think that it's going to last very long. These things happen. You have mid-cycle corrections in gold, in dollars, in foreign exchange. It's all quite normal. I think the question really is, at what point does the financial system get more dovish or start thinking about cuts and stimulus and stuff in the US again? And just to emphasize another point pertaining to this answer, which is the reason why people obsess over the US dollar gold price rather than thinking about it in sterling is because the dollar remains the local currency of the financial system. So we don't think about assets globally in sterling or euros. The market thinks about everything in dollars. And that's why everybody thinks that there's a gold price and they think about it in dollars. It's because it's that relationship between actually really US treasuries and gold. And this is where this thing about the gold price comes from. So look, it's been a bounce for dollars versus gold, and I think that will resolve itself in due course, and the primary trend, which is always for government issued money to go down versus gold, will continue.
It's interesting that you mentioned treasuries because that's an area where I think, oh no, won't touch it. You know, I mean, gilts, treasuries, bonds, generally government bonds look very worrying to me. How do you feel about them?
Look, it's not my area to have too much of an opinion on this, but I tend to have quite a strong opinion on most things. Look, I think the point is what was just touched on there, which is the we're talking about the financial system, not you or me in my own account. It's quite normal that you wouldn't want to own bonds, really. Bonds really are for pension funds and institutional investors and big, huge pots of institutional capital that thinks in a mainstream way. It's quite, I go all around the world and I talk about this topic of gold and silver mining companies. And often I ask the advisor or wealth management business or whoever it is, what's your fixed interest allocation? And they laugh the same way that you're saying, I wouldn't touch that. They don't either. So, there is a structural point here, which is people within the financial system won't own bonds themselves, but they still have to allocate to them. So their actual underlying merit isn't really the point. The point is more, is this a fixed allocation within portfolios? Yes. Is that about to change soon? No. Does the treasury market remain the principal choice within that for institutional capital? Yes. Should it? I don't know. But it's not really. It's a related topic, but it's not really. I think that meaningful, short or medium term, to the underlying merits or investment performance of gold and silver.
And talking about dollar, as you say, we do tend to price gold in dollars, but it's low against the pound as well, relatively speaking. So is that, I'm seeing various adverts for sell your gold, and I think that's a concerning thing for people in this country because really they should be holding on to it, shouldn't they? And waiting
Well,
until.
when you say sell your gold, who's asking you to do that out of interest? Just so I'm clear on what the question is.
Oh, these are those sort of somewhat dodgy adverts that say,
Yeah,
gather up your bits and pieces of
yeah.
rings and
It
whatever.
that's not important. So understand the reason that's happening is because it's actually the opposite of what you're suggesting. So the fact that the price of gold in dollars or sterling is high on a historic basis catalyzes people who need cash to reach for these very as you put it, I can't remember what the word you used, but dodgy or whatever it was, opportunities where basically people are going to offer you somewhere between 30 in an extremely bad case to 70% of the sticker price of your gold jewelry. Really, that's a very good sign. It's telling you that um, that they want it off you. If you saw the opposite and you saw buy gold everywhere, that's probably more of a sign of we're at the top. It's actually not, there's nothing bad about that at all. And indeed, I think you're going to see more and more of this. There are two, the people at the lower end of socioeconomic ladder, whether they're in the UK or even in, for example, Peru or Colombia, they are pushed into the gold economy as things go badly for them and the US dollar gold price goes up. And what I mean by that is they're going to start selling whatever physical gold they have for cash. But you also increasingly see um, artisanal gold um, production by poor people globally because the price is higher, and either they themselves or illegal groups push them to go out and try and mine more gold. So all of this is part of the big picture of the fact that currencies are degrading on an ongoing basis. You're right to say the sterling gold price has had a correction, but I mean all currencies and all government issue currencies trade as a group. So in other words, against gold. So if gold's at zero, they go down together and then they bounce together and then they go down together. There's nothing odd about this behaviorally at all. That's what happens. It's very, very rare you're going to see a situation where the cash and bond market are positive on dollars for 6 months, but not positive on sterling. It can happen, but generally they'll move together. They'll go as a group down and then up and then down.
Hi, I'm going to quickly interrupt this amazing podcast to let you know that Money Magpie Invest has a bi-weekly newsletter where we share tips, tricks and insights to help you become a more confident investor. Our newsletter is completely free to sign up to and it will arrive in your inbox on Saturdays at 12:30 p.m. As well as all of the super useful investing information, we also share exclusive deals from our partners. So if you're serious about building long-term wealth for yourself, I really recommend signing up. And you can find the link in the description of this podcast.
So when it comes to looking at the future of gold, and I say future, I'm talking about the next 6 months, the next 12 months, where do you see it moving? Have you got a crystal ball there that you can just, rub for us quietly?
No, I definitely don't have a crystal ball. But what I always say when people ask that kind of thing is I say, look, do you think that the pound in your pocket will buy the same amount of goods and services in a year, more goods and services in a year, or less goods and services in a year?
Yes.
Now, this is what gold is measuring. It's why it's at zero and the currencies go down. It's what it's doing. So this is exactly what I was trying to explain earlier. Look, that's what's happened in the last 6 months is the currency markets, not the individual, not you, but the currency markets have decided briefly for a few months that a dollar actually, particularly a dollar that's on deposit, will actually look a little better for a few months. And then, of course, the primary trend resumes, which is people realize about debasement and how much money printing is going on and the fact that actually they're going to cut, not hike. And all of this stuff, resumes the long-term trend. So look, unless you think that governments are going to turn disciplined and structurally raise interest rates and not spend more than they bring in taxes, I wouldn't be overly worried about the direction.
That is genuinely funny, just the idea that any of the G7 countries would stop spending, stop overspending, and balance the books, etc. Yeah.
Yeah, just to extrapolate that a little bit beyond the G7, because it's a good way of understanding this topic. Turkish barber in Istanbul, he saves in gold, and it's for the same reason that we just discussed. Nothing to do with the G7. The Turkish barber has zero idea what the US dollar gold price is, and nor does he care. There's no interest in that. All he knows is what the Turkish lira gold price is. Yeah. And the reason he does it is because he knows that the Turkish lira gold price is going to go up. In other words, the Turkish lira will buy him less goods and services in 6 months, 12 months, and 24 months. And this is not prediction people to trade the Turkish lira, by the way. But what he knows in his bones is full well is that's not going to happen. That's why Indians and Turks and people all around the world save using gold rather than local currency. But understand that physical gold is a savings vehicle. It's not an investment. This is a really important point that I think people often lose. And I didn't get this for, way too long. I'm not even going to tell you how long it took me before I really understood this point. Is a lot of people think that gold is an investment. It's actually disinvesting. You're taking your capital away from all risk. You're saying, I don't like any of this. I don't want to be in. I want to be out. I don't trust him, them, the government or anything. I'm saying I want to remove myself. And this is a very important observation because there's a very old phrase, which is an ounce of gold buys me a handmade suit and a handmade pair of shoes. And that's because it maintains its purchasing power. And that means it's not actually an investment. Silver's a bit different, by the way, because of its volatility profile and the fact that it's not pure currency. It's a little bit different, not completely different, but it is actually, you are not making ground holding gold. You could be on a 6-month basis if it has a very large move, but generally people don't sell physical gold, do they?
No, that's
true.
No.
They don't. They don't do it. You use it as a savings vehicle, and if you think of it on a 1, 2, and 5 year basis, it's keeping you level. You're not going under, which is what everybody else is doing.
Well, it's better than nothing. But thank you for mentioning silver because I was going to move on to that because, as you say, that's a different thing. So where are we with silver? I mean, as you mentioned, it is just constantly volatile, but it's low as well, which makes no sense given that there's an increasing use case for silver now.
Sure. Well, I'm smiling because I love the idea you think it's low. I mean, have somebody that bought their first ounce of silver at $4. I'm like, well, it doesn't seem that low to me. But it is, but much more volatile. But it's also not different. Let's be clear about something. They both trade in foreign exchange markets. Directionally, they are exactly the same. In other words, one day gold's up, silver will be up, generally more, and likewise the other direction. It's not 100% perfect, but it pretty much is. They go together. They are both foreign exchange instruments and they trade as a pair. It's just the silver is more volatile. Now, you saw that in January in a way which you were enjoying, and then you saw it subsequently in a way which you're not so happy about. But the reality, idea that it's low, I mean, I invest in mining companies and they mine silver anywhere from, depending on where you are in the world, $10 to $30 an ounce. And where we are now is a pretty comfortable place to be in terms of margin. So look, silver has come down a lot, but the reason it went up is the same reason it came down more than gold, which is silver is more interesting to the retail investor. So what happened with gold? Now, forgive me getting a little bit technical here, but what happened for the US dollar gold price the last few years, it was actually wasn't driven up by what people think it was driven up by. It was driven up by leverage, by hedge funds and sophisticated pools of capital betting on the gold price. So they were borrowing money and fueling that trade on the way up. And that's also why it came down quite sharply as well. Not sharply as silver, but it came down because of deleveraging. In other words, these hedge funds and pools of capital got everything wrong at the end of January, and they were forced to give up those positions. So it wasn't central bank buying or retail buying or anything like that. It was very much leverage in the financial markets that drove gold up. Silver too, but silver caught a retail trade in December and January. And the problem with retail, retail are wonderful, and your client and the people on the call are retail, and we all are on some level, including, by the way, you'll speak to sophisticated financial advisors and they will behave for themselves like a pure retail investor. They won't invest like a sophisticated person. They'll invest like a normal person. In other words, they'll get overexcited and don't risk manage well and this, that, and the other. And the point is that a lot of people were not buying silver. They were buying silver instruments on their phones and on their computers, often 2, 3, usually 3 times leveraged. Now that's great on the way up, but when it starts to turn down, what happens is you get a really painful deleveraging process, and that happened with silver. It's the same as with gold, but more with silver because it was more on the way up, more on the way down, and it will come back. You'll see the same behavior again. It doesn't make me happy. It annoys me that people do that because the silver market is so tight in physical. If people would just buy physical silver, you're going to create a better outcome for yourself medium term than by buying spicy financial instruments, if you follow.
It does seem to me, though, that the future for silver is particularly bright thanks to technology. It's used in so many things: solar panels, medicine, car making, all sorts of things, and particularly with the EVs now, really it's quite extraordinary. So it feels like, unlike gold, which, as you say, is sort of the zero, silver is more a commodity that's really being used and is likely to go up faster than gold potentially.
Yeah, so it doesn't go up faster than gold because of that yet.
Okay.
However, you are right to bring it up. So the point about what you just said is 100% true. It just doesn't make any difference to the price at the moment. The reason is because the silver price, like gold, is trading in the foreign exchange market by big, sophisticated institutional money. It's not driven by car makers or solar panel manufacturers. Now, there will come a point where we have a delivery failure. In other words, a car manufacturer or a electronics manufacturer gets told, sorry, it didn't turn up. At that point, then you'll see something completely extraordinary will happen. And I say will, as in I'm pretty sure it will happen at some point. But having said that, I have been waiting for that for quite a long time, as other people probably watching this have too. So I don't think you should get, don't be too fixated on the when with that. It's just pure physics that it will happen because there is a major problem with supply and demand. We can see the above ground inventories in China are depleting to almost zero. So there's clearly an issue here, but it has not manifested yet. Let's be very clear. The price action hasn't had anything to do with that so far. It's just been piggybacking gold. They behave together. But there will come a point where you will see genuine price discovery with silver and people go, look, I don't care. Or not people, industry will say, I don't care what the price is. We can't build TVs, etc., without the silver powder that we need to do it. And solar is obviously a huge component of this, and it's a very big problem. And I'd say, leaving aside the investment case for silver, the world has a big problem here with silver and solar. it's baked in that we can use silver to deliver vast amounts of electrical power over the next 15, 20, 30 years. And it's just not going to happen. I know this because I invest in the mining side and I know about the supply, and there's just no way that any of this works at all. Indeed, I would speculate, and it's a speculation, but I would speculate that at some point we're going to have some sort of quotas in solar panel manufacturing, because it's such a big use case for silver that it can't eat everybody else's silver. It can't just eat electronics, and of course you can't stop investment demand. You might want to and say, oh no, you can't buy silver, but silver is available in so many different venues, even down to eBay. You can't stop people buying silver. They're going to do it. So we got a problem here. It's a problem. It's not just an exciting story. It's actually a problem for the global economy, and I don't really see how we're going to resolve it easily. It's going to be an issue. There can be a regulatory tailwind for new mining. You can even have, direct support from governments to get new projects up and running. But the thing about silver mining, it takes a very long time for a new project to get into production. It's not like oil and gas where you stick a straw in and out comes the oil and gas. It's just not like that at all. It's a very long lead time. So all of this is super interesting and true, and what you said is right. And indeed, more and more odd use cases appear every day because silver is the most conductive element. And in a world of hyper optimization where things get smaller and more efficient, you can't replace the thing that's the most conductive, no matter whether you might want to. You can use gold in a bunch of applications, but the price obviously is something like 70 times at the moment. So it's unlikely that will happen anytime soon.
So when it comes to miners, as you say, you invest in mining companies through Jupiter and everything. Is it worth the retail investor looking at mining companies, or are they just too volatile? Is it just because I think would like to, but I'd rather leave it to the professionals personally.
Yeah, I think what you say is right. Look, I think it's different. That's very much an active investment. Whereas buying physical metal, in my view, isn't. It's something else. It's something which roots you. It gives you certainty. There's something wonderful about owning physical metal, particularly silver. Gold is great, but it's obviously very expensive, and most people aren't going to be able to get hold of kilo bars of gold. But physical silver, there's something visceral and in the genes when you hold it. So look, I agree with what you just said. Silver mining is best left to the specialists and is highly volatile and exciting at times and also painful at times, and not the same thing.
So finally, Ned, what would your I'm not going to use the word advice because we do not have advice in this program, in this podcast. But what would your main points be to the retail investor when it comes to gold and silver right now? How should they be thinking about it?
As savings, as diversification, as insurance against what they see. I often say that owning gold, you are betting against, or as we say in financial markets, you're short your own politicians. So that's what we've been discussing the whole way through this conversation. That's what you're doing. You're saying, I don't like them, don't trust them, I want to be short them. That's why lots of people globally do that. So that's the most important thing. You're saying, look, I'm being told one thing, and I'm not sure that I believe this. And of course, there are degrees of extreme version of that observation. From I slightly distrust this to where's the exit? So, that's the key thing. And then with silver, you've got this dual thing where you're doing that, but you're also saying, I'm betting on the future. I'm betting on consumption and electrification and digitization and green tech and all the relentless use cases of that metal.
Excellent. Well, thank you. Thank you so much. This is really, really useful, Ned. That's been Ned Naylor-Leyland, who's head of gold and silver at Jupiter. And you can have a look at what he does on the Jupiter funds, on the Jupiter website. This is the MoneyMagpie Invest podcast. You are to subscribe if you haven't already. Like, comment. We'd be very interested in your views on gold and silver as well. And we always read them and we do reply. And remember, this is MoneyMagpie Invest. Join us next week.